Welcome back to Taxes Made Simple. I'm your host, Karlton Dennis. In today's video, we'll be going over 5 audit indicators for new S-corporation owners. I work with a lot of taxpayers that have LLCs, and a majority of them will eventually switch over to S-corps as their business continues to grow. If you're a new S-corporation owner, there's nothing more important than making sure you understand how to use your S-corp and how to avoid putting yourself at risk of getting an audit. In today's video, we'll be discussing 5 key audit indicators so you can make sure that you avoid these mistakes to protect yourself and your business. Without further ado, let's dive in. All right, guys, welcome back to the channel. I'm so glad that you guys are here. Today, we'll be going over S-corporation audit risks. I want to make sure that we talked about this because I have a lot of business owners that have made the transition over to the S-corporation, and there's not a lot of information on the internet that's protecting you from putting yourself at audit risk. So in today's video, I want to give you some of the 5 most important factors that results in S-corporation owners getting audited. And if you avoid these 5 factors, I promise you that you will be able to protect your business and reduce your ability of getting audited. So let's jump in. Number 1, forgetting to take payroll. You see, many new business owners who switch over to the S-corp, they realize that the S-corp is saving them money on self-employment taxes. In case you didn't know, self-employment tax is 15.3%. It's comprised of Social Security and Medicare tax. One of the big benefits of being in an S-corp is that you don't have to pay self-employment taxes on all of your business's profits. You only pay self-employment tax on the amount of salary you give yourself. But one of the mistakes that many new S-corporation owners do is they forget to process payroll for themselves. Yes, you may have employees, but did you know that when you become an S-corporation, you're an employee underneath the S-corp, and legally you have to issue yourself a W-2. So many S-corporation owners forget to issue themselves a W-2, resulting in their S-corporation getting audited because there wasn't a reasonable compensation taken out of the S-corp. If you're trying to reduce your audit risk, then please make sure that prior to December 31st, that you issue yourself a payroll and that you pay into the self-employment taxes based off of the reasonable salary you decide to give yourself. Now, you might be asking, Karlton, how do I know what's reasonable? The IRS does have an audit technique guide, and they believe that giving yourself a salary of at least 1/3 of your business's profits is considered reasonable on a year-in and year-out basis. So if you're trying to do best practices as an S-corporation owner, you're going to make sure that you provide yourself a payroll, and you're going to make sure that you take it prior to December 31st. The second mistake that you can make as an S-corporation owner is actually overpaying yourself on payroll. Now, it's one thing to not remember to take payroll. It's another thing to overpay yourself. As a self-employed individual, it is our job to make sure that we're maximizing our tax benefits. Being a self-employed S-corporation owner, you get to place yourself on payroll, giving your S-corporation a tax deduction. But did you know that when you place yourself on payroll, you're paying into Social Security, Medicare, federal taxes, and if you're in a state that taxes, you're also paying into state taxes. These taxes begin to pile up, which is why we want to limit the amount of payroll taxes that you're paying into, which is why you should only take a reasonable compensation from your S-corporation. But sometimes S-corporation owners are unaware of what a reasonable compensation is. And sometimes S-corporation owners are placing themselves on payroll too early on in their S-corps. This results in them paying into higher amounts of payroll taxes. Now, you might be wondering, Karlton, why is that such an issue? Won't we just get this money coming back in the form of a refund? The IRS issues federal refunds, the state issues refunds, Social Security and Medicare department do not issue refunds. Yes, so that means that if you overpay into Social Security, if you overpay into Medicare, that does not come in the form of a refund check when you file your tax returns in the following year. That's a big issue for many S-corporation owners who are trying to protect their wealth and reinvest their funds back into their business. They're ending up overpaying in taxes, and that's money that they won't get back until later on in their retirement. So if you're trying to become a savvy S-corporation owner, please make sure that you're being very careful about how much salary you're giving yourself. And if you need to, you can have your tax professional run the numbers for you on what a reasonable compensation is relative to your business's profits. The third mistake that many S-corporation owners make is underpaying themselves in payroll. Now, we've talked about not taking payroll. We talked about overpaying yourself in payroll. Now we're going to talk about underpaying yourself in payroll. And this is probably the worst of the 3. When you decide to underpay yourself a salary from your S-corporation, what you're telling the IRS is that you only want to pay a certain amount of Social Security, you only want to pay a certain amount of Medicare taxes, and that results in you only only paying a certain amount of self-employment taxes on the amount of salary that you're paying into. The IRS may not have an issue with this, but the EDD, which is the payroll department, they will have an issue with it.
Maybe we all have the same issues.
The IRS and the EDD work together to do reasonable compensation audits on S-corporation owners. And the reason that they do this is because they want to make sure that S-corporation owners are paying enough into Medicare, are paying enough into Social Security in order to justify being a S-corporation owner. One of the many benefits to being an S-corporation owner is you get to take distributions and you get to take a salary. But if you're choosing to take a majority of your money in the form of a distributions and you're giving yourself a very small amount of salary, that's limiting the amount of self-employment taxes that you're paying into as an S-corporation owner. And in the eyes of the IRS, you could be abusing the S-corporation structure by not giving yourself enough reasonable compensation. I have dealt with a few EDD audits with some clients before in the past who came over to my firm, and they were pretty nasty audits. And what it came down to was these customers did not give themselves a reasonable compensation from their S corporations. And as a result, the IRS required them to resubmit new payroll tax forms and pay the balance that they should have paid, plus interest and penalty fees. This sucked for those clients because it was a lot of money and I didn't want them to have to pay that, but they had to because the EDD does not play around. So if you're watching this video and you have an S corporation, I'm encouraging you to make sure you're doing the math ahead of time. Calculate what your business's profits are going to be and then try to give yourself somewhere around 30% or a third in reasonable compensation to avoid a reasonable compensation audit. The fourth audit risk as an S corporation owner is using personal credit cards for your S corporation. Now that you've decided to switch from an LLC to a corporation, the scrutiny of having a corporation has just increased for you. That means that the rules that you abide by need to be followed and you can't play around with them. One of the rules is commingling expenses. If you choose to commingle your personal assets and your business assets in the same personal credit card that you're utilizing, this is going to put your business at risk. And when you get audited, they can choose to audit not only the S corporation, they can actually audit your personal tax returns now. Oh, wow. Now your entire financial picture has been completely exposed to the IRS. And what ends up happening when this happens is the IRS has reasonable cause now to jump from the current year that they're auditing you on and go back up to 3 years. Could you imagine dealing with one audit and you just got done with that one audit, then you're doing an audit for the previous year of 2022, and then you have to go through that audit and then they jump over to 2021? Do you know how much progression you would slow down on being able to grow your business because you're sitting around dealing with the IRS as opposed to sitting around dealing with how you can forge your thoughts and actions into creating more products and services for your customer? This is what prevents you from being able to grow as a business owner, and it also keeps you in a state of fear. Now you fear making money because you think that the IRS is going to come after all of it. This could all be avoided by making sure that we're doing the best practices as business owners, and doing best practices as a business owner is making sure we're utilizing our business bank accounts separate from our personal accounts. S corporation owner, I'm talking to you. Do not make the mistake of commingling your expenses. What happens when you get into an audit is your personal tax returns could get caught in the audit just as much as your S corporation does. And once the IRS has your individual tax return, you are exposed. So if you're trying to protect yourself and your personal finances, your personal bank accounts from the IRS getting access to see all of your personal bank statements, I'm encouraging you to use business credit cards and keep your business credit cards separate from your personal credit cards when you're running an S-corp. The fifth mistake I see with S-corporation owners is hiring their children through the S-corp and not choosing to file the payroll tax returns, the 940s and the 941s. If you decide to place your child on payroll through an S-corp, which is not something I recommend, you're going to need to file 940s and 941s. These are the payroll documents, and these are the payroll tax returns that have to be filed for your child that you are placing underneath your S-corp. The reason why most tax professionals will not recommend to place your children underneath an S-corp and to establish an LLC to place them underneath is because with an S-corp, you have to pay payroll taxes on the amount of money you give your children. Sure, you can pay them up to the $13,850, the standard deduction, but because it's inside of the S corporation structure, you have to pay payroll taxes 15.3% on the $13,850 that you're giving your children in the form of a salary. This part of the tax code seems to go missed or is not talked about when it's time to file your tax returns. And when I get many S corporation owners who are coming over to me from other firms that have taught them to place their children on payroll through these S corps, I find out that the payroll tax documents have not been filed and there's been no W-2 issued to the children.
That's ridiculous.
You have to make sure that you're following the correct steps if you're trying to take the children on payroll deduction. And one of the correct steps to follow when utilizing an S-corp is making sure you file your payroll tax returns for your children. This has to be done prior to January 31st. And if you're somebody that has an S corporation, you can choose to establish a separate entity such as a management company LLC to place your children on payroll to avoid paying payroll taxes. Listen guys, we've gone over 5 audit indicators for S corporations, but there are more than just these 5 audit indicators. So if you're looking to grow your finances and be able to protect your S corporation, I would encourage you to sign up for our tax-free wealth event. During these 5 days, I'll be going over advanced tax strategies for S corporations and LLC owners, and I'll be able to teach you all of the advanced strategies so you can implement them prior to December 31st. If you're trying to protect your business, prevent yourself from getting an audit, but also maximize the tax code to the fullest extent, then I would encourage you to sign up as a VIP for the tax-free wealth event. You can find a link below in the description. That's all for today's video. Thank you so much for joining, and I look forward to seeing you on the next one. Cheers.